Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Taylor Riggs here, counting you down to the closing bell. And now here to help take us beyond the bell. It's our global simulcast with Carol Massar and Tim Stenovec, bringing together our Bloomberg Television, Radio, and YouTube audiences here on a relatively muted day. Carol, you had an S&P 500 that pretty much opened the day flat. It's been in the red for a good portion of the day. Really hasn't managed to gain any traction whatsoever.
Well, and Romaine, it's been interesting to read some of the market analysis out there. They're saying that some of what we're seeing in the trade today is concerns once again about inflation concerns. But, having said that, I'm looking all along the yield curve, and rates are also down. They were higher during an earlier part, maybe right out of the gate this morning, but nonetheless, we're seeing them lower. So I'm trying to get my head around, if there's inflation concerns, why aren't, Tim, rates rising?
Right. We did see Target earnings today, sort of a similar story from yesterday. I think that plays into the inflation narrative. But at the same time, we just spoke to Alan Zafran at IEQ Capital, and he said he's on team transitory. He pointed to where the 10-year is and has been as a sign that inflation, well, it's not here to stay.
What was that acronym, Taylor, that you were told with your new
yes,
moment?
I found a new acronym. Thank you, Caroline. I have a new acronym. Instead of Tina is old news. The new one is Teeny. Transitory, question mark, it's not inflation.
Yeah, and I mean, look, of
not
course,
sure it's going to catch on, just saying.
It's not going to catch on. But I mean, but back to the point about the idea here that the bond market is telling a little bit something about those expectations and the flattening that we continue to see across the yield curves with the 530 right now at 75 basis points here. And I think the 210s also slightly lower here on the day, of course. Look. This isn't a huge down day here. We'll let Caroline clear her throat for 1 second here. The Dow Jones Industrial Average down slightly here on the day, down by about 210 points here. We wait for these numbers to settle around this time as we do every day, but it's going to be a down day. 0.6% on the Dow, about 2 to 0.3% on the S&P 500, 0.3% on the Nasdaq Composite. The big underperformer of the day, though, that's actually going to go to the Russell 2000. The Russell 2000 down about 28 points, or about 1.2% here. A lot of biotech names leading the slower. And actually, a lot of those EV makers like Fisker, which is down about 9% on the day, and a few other retailers like Macy's, which is down 5% on the day, Carol.
And did you mention small caps? Because we did see the small cap industry world, I should say, taking a little bit of a hit, down about 1.2%. So
yeah, that's the Russell 2000.
Right, yeah.
I just said that.
Oh, okay.
Well, despite calls, though, from Ned Davis Research,
Carol doesn't
small
listen
caps,
to me. That's the moral of the story.
The Ned Davis Research, Ed Clissel's out with a note today saying the small caps are actually maybe now the place to be. So certainly we can debate that further. Let's go back to some of the big caps that we're seeing in terms of the S&P 500. For the radio audience, it's green in the winners and it's red in the losers on a sector basis. Let me just run you through a little bit of some of the action. It's auto, and some of these auto components are up about 3.4%. Otherwise, it really seems to be a bond story, Carol, with tech and real estate the second best performers. How much of that is if bond yields are falling? And then, of course, do you see this as the camera migrates down to the bottom of the screen with banks and some of the dividend financials? And then, of course, some of the energy index, that's off about 2%. Wondering how we're thinking about that reflationary trade today.
All right, let's take a look at some of the gainers. TJX, that was atop the pack in the S&P 500.
Yeah, you were talking this up yesterday.
I know.
You love the rummages.
I do. I love the search for a bargain. Stock was up about 6%. It was, though, out of the gate up almost 11%. Settled down a little bit, but still with about a 6% gain on the session. Rallying to a record after third quarter results. Top analyst estimates. The company saying it is in an excellent inventory position heading into the holidays. Sales in the earlier part of the fourth quarter were very strong. But again, this is a different type of retailer. They also increased their range for expected share buybacks or by $500 million. So now they're looking at about $1.75 to $2 billion worth of stock in a buyback. And they
8 days to Thanksgiving, by the way.
What?
8 days until Thanksgiving.
38 to Christmas.
Get your turkey towels as we speak. Moderna up about 3.4%, top in the S&P 500 and in the NASDAQ 100, seeking emergency use authorization of the COVID booster for adults 18 and over. You also had the Biden administration saying that they're going to help drug makers out in terms of production and giving $1 billion to those efforts. And Tesla, I wanted to mention Tesla because it's been under some pressure. We did see a gain of about 3.25% after a 4% gain yesterday, top in the NASDAQ 100 and the S&P 500, even as Elon continues to sell stock.
All right. Well, it was sort of a tale of two different retailers today, TJX versus what we saw with Target. Target shares finishing the day down by more than 4.7%. Talked about this a little earlier. We've been talking about it all day. A really similar story with what we saw with Walmart yesterday. A really good report, except for gross margins. Target even raised its full year sales guidance. The company isn't passing along these rising costs onto consumers. They're eating them, and that's digging into gross margins. Higher costs, labor expenses also weighing on the company. I did talk to CFRA analyst Arun Sundaram earlier today. We had him on Quick Take Stock. He actually said today's slide is a buying opportunity, and he raised his price target to $308, so significantly higher than where it's trading right now at $253. Also, keep an eye on Visa. Shares lower by 4.7% today. Fell the most in over a year at one point today after Amazon said it will stop accepting purchases made with the credit card issued in the UK as of next year. In the US, Amazon does have the Visa branded credit card.
Can I pay with a Visa in the United States?
For now, you can.
Okay.
But Jenny Serrain actually had a story out just a little while ago, a Bloomberg exclusive.
I like her, yeah.
Yeah, she's fantastic. She talked about Amazon considering this change to its co-branded credit card, potentially moving to rival MasterCard as a way to secure better terms from Visa.
In all seriousness, why do we need Visa, MasterCard, Amex? I mean, aren't we at a stage now where some of these other sort of newfangled fintech payment systems could kind of circumvent that?
Are you saying we should do crypto via?
Yes, it always comes back to crypto.
But even a lot of those fintech companies are still using traditional payment methods at this point.
Right, for transactions, right? To actually process the transactions.
Exactly. We saw shares of MasterCard move lower today as well. Rivian Automotive, Carol, you talked about Tesla. Guess what? Rivian stock, it goes down. It doesn't just go up. This is the first time it's gone down. Went down 15% today. It's trading at $146. You have to go all the way back to, I think, Monday for it to be trading this low.
All the way back to Monday.
Not a move on fundamentals, by the way.
All-time decline there.
Not a move on fundamentals.
Let's look at what's also moving in the FX world. And it's notable that, talking of wild rides, yen has been on quite the volatile mix. We saw yesterday it sell off significantly. Today it's having its best day since August, where the Japanese yen up 0.6%. So finally we get a little bit of a dollar weakness story on the day. We're seeing the Canadian dollar, though, weaker than the US dollar. That in large part because this is a tale of what's happening in commodities. Similar for the Aussie dollar, off by 0.5%. Inflation, of course, is key watchword for everyone. This is a global story. It's not just what's happening here in the United States. The Great British Pound up by 0.4%, as we currently see that the UK's inflation reading coming in the strongest in a decade. I look at what's happening in oil. We're off by almost 3% in WTI crude. Will we see some sort of tap into the reserves in the United States? It's still being discussed. Natural gas actually down by some 6% after we rallied yesterday. And sovereign bonds, mixed picture. We're seeing Canadian 5-year currently yields pushing down in Canada and the US, up in Japan.
All right, want to get to Cisco Systems because they are out with their earnings and the stock is dropping about 8.4% here in the after hours. First of all, let's get to the outlook because the company sees second quarter revenue up 4.5% to 6.5%. The estimate out there was much more optimistic, about a 7.4% increase. It also sees first quarter service revenue, getting to the breakdown of some of the companies, different business divisions, $3.37 billion. That was a slight miss of $3.44 billion. It also, let me go to the first quarter revenue number. That was pretty much on target, $12.9 billion versus $12.99 billion, the estimate. First quarter adjusted EPS, 82 cents a share. That's a penny better than what Wall Street was expecting, but that outlook is definitely a disappointment. The stock, it's a mega tech company, right, and plays into the networking and connected space. It's been up about, almost 30% so far this year, so maybe expectations going into it were pretty high. But this company also plays with a lot of the semiconductor companies. That's where they get a lot of supplies from. So it'll be interesting to see what they have to say on that call, Tim.
You're watching shares of Cisco. I'm watching shares of Sonos bouncing around in after hours. At first, when these numbers came out, shares were down 8% after hours. Now they're higher after Sonos announced a $150 million share buyback. As far as results go, Sonos pretty much met expectations on the top line, but it was a miss on the bottom line. In a statement, the company's CEO, Patrick Spence, who we're going to be speaking to tomorrow, said we've just completed a record fiscal 2021 and are confident in the long-term growth, profit, and cash generation of our model. We are committed to driving long-term shareholder value. Looking forward to any commentary that the company has to say about supply chain challenges and any delays as we get into the holiday season and what consumers can expect, Romaine.
Yeah, I think that's more what I'm interested in hearing, how they're going to deal with that. Obviously, they deal with a lot of these parts issues, and we've been joking a lot today about how some of these supply chain issues are easing. There was actually an interesting note out by Goldman today saying that some of the issues affecting Apple, that's starting to ease. We've also heard from other companies, including over at Target, saying that, look, I mean, it's not as bad as it was. That doesn't necessarily mean we're back to pre-pandemic levels. And today, Tim, my couch arrived.
Congratulations on your couch. I got to tell you,
Congrats.
anecdotally speaking, I actually ordered a Sonos for my father for his birthday back in August.
not watching.
And did it arrive?
It took weeks for it to arrive, and that was at that point then.
Meanwhile, that we're hearing, of course, from members of the Fed still, and Evans saying supply shocks have gone on longer than I expected. So clearly, this anecdotal evidence that things are starting to turn up, mainly in Romaine's apartment, well, for many, still not occurring.
Well,
Couch surfing at Romaine.
The sofa's there. It's set up. We're going to have a sofa party. All 5 of you are invited.
well, Cisco.
And we're not allowed to touch it.
Cisco.
Well, you can't sit on it. That would be-
All right, Cisco expects supply chain challenges, by the way, which have weighed on profit to carry into at least the first half of the year. So that's in their press releases. No talk of couches, but they are talking about the supply chain overall.
Yeah, we're keeping an eye, by the way, on NVIDIA earnings coming off after the bell as well.
All right, folks, that's going to do it for our market wrap coverage beyond the bell on radio, TV, and on YouTube. We'll see you again, same time, same place tomorrow.